Boom, we are alive, ladies and gentlemen, not in the bear cave, as I'm sure you can see quite easily. We're going to go over some fun things today. We're going to start by taking a look at Bitcoin, really quickly, Ethereum. We're going to roll through a selection of our basket of favorites, and we're going to be talking about Mark Cuban and this Titan nonsense, which just seems kind of funny and ironic, if you think about it. And then we are going to take a look at Insurace as well. So that's our quick final overview for today. So let's start right where we were with Bitcoin. Boom, there it is on the 6 hour. Now, you're probably wondering, oh, hey, Tio, what's this new wonderful, colorful chart pattern you have? Well, this is called the Bear Claw. It is available for the last time. You can download any of our TradingView indicators for free. After that, they're going to go to our private members only, just by the Bear members. They'd asked for that one, so they get what they want. But nonetheless, this is a stacked set of exponential moving averages and two slow moving averages. The green is the 200 and the blue is the 314-day simple moving average. Again, stacked exponentials of 5, 10, 15, 25, 30, 35, 40, 50, etc. So what's the point of this? Well, it actually shows us an area of support and resistance. Now, on the 6 hour, for the first time, we've actually closed above the top of the EMAs, and we're right above the top of the POC. So let's get rid of those for a minute and take a look at just our standard chart, remembering that removing noise often allows us to come to a much better conclusion with significantly less trouble. So one of the reasons why we want to always be focusing on removing data is you can get swamped in things that are actually not very beneficial for you. Right, so data can become mostly noise, and from noise, it's hard to figure out what the signal is. We went over that in one of our episodes the other day. So even though I like exponential and simple moving averages, they're kind of lagging indicators, and they're helpful for retrospective study to figure out where we are now. So here we are in the middle of a trading range. And one of the difficult parts now is that if you've been studying with us for quite some time, you'll know that the phase that we're about to enter, whether this is phase A, we're finished phase B and moving into phase C, this is like the do or die moment usually. Phase C in the Wyckoff accumulation, distribution, or reaccumulation or redistribution patterns, phase C is critical. And although we are not there yet, we will be soon. And this is going to be kind of a deciding factor for how the rest of the market cycle plays out. Now, personally, I am leaning to the idea that we do something like this. We maybe bounce off the top of our falling wedge and we move higher. Again, remember, let's start by thinking not what happens if we're right, but what happens if we're wrong. Well, if we're wrong, it would do something like this. It could turn into a spring, which we've seen before. These falling wedge scenarios have a spring right at the finality of the falling wedge. We've seen this many times before. But let's say it breaks down, can't get above, this turns into a last point of supply and weakness, and then we just fall down to $20,000. You should always lead by thinking what happens in the worst case scenario. So again, we've seen moments like this where you could argue that it would be a head and shoulders, and there's a very real reason to believe that this could be the case, right? So let's prepare for the potential for downside. We did that around April 23rd by removing a good chunk at around $56,000 and waiting the rest out. Now, I did buy more Bitcoin in this area, but I'm being patient now just to wait for the final confirmations and signal, because again, I don't know what's going to happen. And if we all of a sudden get a $20,000 Bitcoin instead of a $30,000 Bitcoin, well, I'm just going to be buying more. Now, the reason why I don't believe we're going to go, we can't hear you. Oh, damn. I got this new microphone and apparently it's not as effective as I would have hoped. Let me try to fix this really quickly. I know that this is one of the downsides about moving situations. No, it says it's going good. I can barely hear you. Check, check, 1, 2. Well, it's up there pretty good. Well, hopefully that works better. Okay. So, damn, these always changing scenery is never easy, hey? I have to find a better way to do that. It was working fine for all my other calls today, guys. I'm sorry. So, again, remembering that right now, one of the reasons why I don't think we're in a bearish scenario, well, there's two stories here, technically. If we go out to the daily on Bitcoin, there's a few key functions that I think are really important to understand. Number one, we have seen these big moves up as SOSs and returns back to around the top of the box many times before. So this would be our primary SOS outside of our trading range, and then this would be our LPS to the downside of our trading range. Now, we have seen LPS signals move all the way to the bottom, way down here. So this would be the top of our previous trading range, or the top of the all-time high, and the bottom of our trading range around the $3,000 area here. So one of the things we want to make sure that we're always doing is, again, initializing or the start of any investment thesis with tails I don't lose much, right? So that means no matter what I have in Bitcoin right now, or you should be okay with sitting on it if it drops 30 to 40%. And if you're okay with that, you're doing it right. If you're not okay with that, you're probably doing it wrong. Because often what we will do is we'll go, hey, Bitcoin's going to go up to $200,000, which it probably will, but when is a great question. And you won't be prepared for the downside risk because you led with yourself, well, if Bitcoin goes to $200,000, I will have $10 million. And leading with hope and optimism is not a great way to go. It can lead to a lot of downside, mostly in your ability to protect your capital. So one of the things I wanted to start by pointing out was yesterday, we were talking about this signal to noise and how to focus on leading with adjusting for the downside first, not second, long-term strategy. These are all things that myself throughout the years have learned that are the most effective and the most capital productive without losing a shit ton of money, which is actually relatively easy to do. The markets are older than you, they will live longer than you, and because of that, they've gotten very good at taking your money away from you. And giving it to somebody else often as well. And sometimes those people just get brain shit, dumb luck, lucky. Anyways, so it's not always a skill set thing so much as it is a strategy thing. And I think that's one of the most important things to understand. So could we come down to 20 grand? Yes, absolutely. We've seen many SOS and LPS signals do that many times before. If it comes down, am I prepared to buy more and just keep holding on what I have? Yes, I am, because I exited a good chunk around $56,000. So what's the next part of this story? Well, again, I'm leading bullish, ultimately. I think that what we're witnessing is the start of a new trading range and likely a reaccumulation trading range. Now we are we're starting to get into the really kind of critical areas where it can go from reaccumulation, which is what I believe we're witnessing, to distribution and fall down quite quickly. I know I just drew to $11,000, but let's ignore that. So right now, again, when we're in the middle of the market, when there is so much risk as in comparison with the upside potential, first things first, be aware that the potential here is equally as great for the downside as it is for the upside. And if you're new to the ecosystem, finding a consistent strategy of entries on a month-over-month basis is going to yield you the best results. So just stick with that. I know it's kind of boring. You're thinking to yourself, well, Tio, why would I even show up every day and keep studying? Well, you actually end up doing a lot better when you consistently show up with any practice that you do. So I suggest you keep showing up. Now, again, it's not always exciting. You're not watching your account grow astronomically. You're supposed to continue to build that account through over the course of 5, 10, 20 years. And that's where you get to hundreds of millions of dollars or billionaire status if you happen to do it right and there's enough luck on your side. So again, I'm ultimately leading bullish, but I'm really interested to see what we do around the point of control here at around 37,500. So this is a key area I'm going to be watching over the next 24 to 48 hours. I wanted to give a shout out to Glasswalker, who shared this chart in our private group. This was his breakdown of the Wyckoff accumulation potential. And see here, he's looking for a spring at around the $32,000 mark. Whereas I'm actually a little bit more concerned if we can't stay above the descending channel. Now, I drew mine as a falling wedge, whereas he had gone with a channel. Again, this is one of the things about some of these more abstract patterns. I don't really like falling wedges or channels. They're a little bit too much up to the mind of the individual. But here you can see why I've drawn it with the area chart. We are following the bottom of the area chart itself, not the wicks. Wicks to me are basically noise. I like using the area chart because I feel that it gets rid of noise. But either way, you can see right now where we're headed is approximately this $37,000, $36,000 area right around our point of control, where we've had the most buying and selling the last few weeks. Now, There's also a fair amount of support when people bought billions of dollars worth of Bitcoin, like Elon Musk, around the $31,000 mark. So there's a decent floor to suspect that might be there. But nonetheless, we want to keep a close eye on the next probably week or two, because this is really going to confirm or deny our trading range. Now, to sidestep this conversation, the NASDAQ has continued to break into new all-time highs every single freaking day. So we were watching this falling wedge for the last, or this rising wedge for the last 2 weeks right here. We said we have to be careful because these can quickly break down, and this would likely be very bad for Bitcoin's price. But as you can see, the NASDAQ has gone up, up 7.5%. That is not a small move in the traditional markets. That is actually a very big move for the NASDAQ. I mean, if you look back over the last few months, we've seen one of the biggest growths in the NASDAQ on a kind of a day-over-day basis. Even this one here was 8%. So we've seen one of the bigger moves in the NASDAQ to the upside that we've seen in almost the last month, aside from the kind of the first part of the pandemic and this nice jump up to, what was this? It was approximately 12%, I think. 16%. Wow, the NASDAQ has been on fire. Not that I like traditional stocks, we use this to generally take an overview of what else is going on in the regular markets and what's going on in people's minds too. So the S&P 500 has not been able to stay as strong as the NASDAQ, although mind you, the general commodity layers are probably up quite a bit higher. Tech stocks, which is, again, you know, the S&P 500 is not only tech stocks, but it's actually leading, most of it is led by tech stocks. It's the 500 strongest companies in the United States. So it's often tech now. Just to be clarified, just clarifying that, I know that QQQ is like tech only, but S&P is a much better measurement of like the tech sector in general, because it includes the commodities that are necessary for tech. Anyways, unimportant part of the conversation. So now that we can see, okay, well, we've got new highs in the NASDAQ. We've got the S&P 500 still at the top of its trading range. The dollar index is, although it's not one of our favorites, it's actually been showing a fair amount of strength within the trading range, and over the last few days, it's actually turned up. The US dollar has somehow gained strength, 2.2% up on the US dollar. This is not a small move either. And what's nice is that this is not actually causing a lot of volatility on Bitcoin either, where we have seen in the past, there is more correlation between the strength of the dollar and the weakness of the Bitcoin, or in vice versa. So a fair amount of strength in the US dollar and not a corollary response in Bitcoin seems to feel positive. Overall, I feel good. Really quickly though, we'll look at the rest of our portfolio. Mercurial fell below the trading range. I'm on like a thesis of basically accumulate only. You know, one of the strategies I like to do is simplify my life and everything I do, and just accumulating is actually a pretty easy game plan, and it works out. So I'm a big fan of Mercurial here. Again, once we hit the bottom of this trading range and this supply line, it started to look pretty weak. But at first we had this nice 15% explosion, and then we retraced all of that and then some by about 25% in total. So again, we see the potential for downside. Like, look at Avalanche here too. I'm a big fan of Avalanche, but again, when you're dealing with this much volatility, 60%, like, you really need to be okay with the fluctuations of your portfolio. If those are the things that keep you up at night, again, I think you're doing it wrong. You should correct to make sure that you can sleep on assets, because time is a valuable factor. I mean, you bought Ethereum at $600 and then watch it go down to $200 and then sold it, you didn't get to enjoy the ride to $4,000 and then maybe to $12,000. So focus on being okay with the downside, and not focusing on the upside usually yields much better results. So we're actually hitting the floor, or what appears to be the current floor on Avalanche. We've hit a supply line here. We can see that's descending to, again, mind you, our first entries into Avalanche were between the $1 to $3 area. We're still up quite a bit. It's down significantly since the $60 mark. Like, this is actually incredible that it's down 75%. So to some degree, we could assume that we've actually been witnessing somewhat of a bear market, or at least the start of the bear market, in a lot of assets. And we've seen this before, where the market will shoot up, it will come back down, it'll form these really long, weird reaccumulation cycles, and then go for another run. We saw that in Band, we saw that in Kyber Network, and a few others over the previous months. Serum is another great example of just how flushed I got. Like I got absolutely killed on one of my trades here. I had a huge six-figure trade, or not trade, but a position I was sitting on that's now basically down 60%. So you got to be able to sit on losses, or at least paper losses, to be okay with this game. Like it could come down a bunch more and I'd be like, wow, great, a better time to buy effectively. So I entered, maybe we could say I entered a bit too heavy into Serum. I really thought we were going to see a much bigger extension. And again, it got turned around real fast in the break of Bitcoin. And it was kind of obvious. I mean, the fact that I exited Bitcoin should have been a leading indicator for me. But for some reason, I was super stoked about Serum. So I apologize to myself for that one. Mark, our supply elastic token, is doing what it's supposed to be doing, at least on the price charts, which is staying approximate to the SDR. So remember, benchmark is another one of these kind of unique versions of a stable coin that we're looking for. You've got DAI, Maker, a few others. It's just a really interesting way to run DeFi protocols. That's why we've added Mark to the list. And we're actually looking for the decrease in volatility here, not an increase in it. So as it grows, it should actually become more and more stable. And that's what we're seeing. So everything's actually looking good in the benchmark protocol. Solana, again, this is where things start to, again, maybe lean towards more of the downside, is we came right up to the point of control and twice we couldn't break through and have turned around on Solana as well. So we had like 100% retracement to the upside for Solana, and we couldn't break through that point of control, this really hard pink line running through the screen here. So these kind of things lead me to believe that there is further downside right around the corner, which then would move into the Bitcoin thesis that even though I feel like we're seeing a positive reaccumulation cycle here, there are other things in the market like Solana, which is a very powerful project that is not looking, we were hoping to see a break above the POC and we didn't get that. Same thing here with 1 inch. You can see we tried to move up towards the point of control, which is what POC stands for, in case I didn't make that one clear. For those of you that don't know, the VPVR on the right-hand side here is known as the point of control. It shows you where the most buying and selling on any particular product or asset has taken place. And as you can see, for us, that's right here at around the $4.90 mark. And here we are at the $3.80 mark. And tails, I don't lose much. Heads, I win. So again, you've got beautiful potential projects like 1 inch here. Tried to get back towards the POC, couldn't. Woo as well. Woo had 150% upside from the, or 230, Jesus Christ, what a nice friggin' bounce that was. A 230% bounce. Still hasn't broken above the supply line, but look, well, actually, I mean, we could get rid of this. So the point of control will always change too, by the way, just in case you're wondering. See here now, it's gonna show up down here and now up here. So we've, on the shorter time frames, we've actually broken above the POC or the point of control for Woo Trade. So there is still bulls in this ecosystem accumulating assets that they are interested in, but it doesn't look super strong yet. And again, Ethereum could not stay above the point of control within this trading range. So it's likely that we're going to test at least the lower region of our trading range. And again, what you can see here is lower highs along the way. So overall, even though the general markets are bullish, we could be in for another. And again, I actually, I'm still leaning towards bullish, and we'll go over that. If I actually even have these charts open, let's see here. Yeah, okay, so here's Glassnode, and what's not looking healthy again here is that the market and the supply of Bitcoin has actually stayed relatively flat, which means there are a lot of big players selling a fair amount of Bitcoin at this price as well, and generally putting onto the markets in a fairly stable, consistent manner. We saw this, the supply actually drop significantly here. It was all the way down at around 12% or 13.4%, and then it shot right back up to 13.7%. So this is the amount of Bitcoin on the open markets right now. And it's, again, we're seeing signs of weakness when the supply is actually increasing, which is what we don't want to see. So where are we? We're right in the middle of the market as far as I'm concerned. We're probably going to get bored and tossed around here. Even again, remember that let's just again start with the thesis that the bull market is over. We could come down to 20 grand. Great. This represents an opportunity to continue to accumulate undervalued assets. It would mean we're going to see a total depression in other assets that we are also interested in. Remember, we were taking our first Solana plays back here at 11 bucks. It's up at 40 bucks. We've still done well with a lot of our plays, but it might be time to start stepping out of a few more of them. So like Solana, I'll probably decrease my position here just because we saw a nice rally. Whereas with Serum, like we had no bounce at all, just basically straight down. So that's a little worrying to me. Again, it's just the general weakness, and I'm confused by how strong the NASDAQ has been. So all in all, I think today's episode, wanted to focus on two key fundamentals. A, lead with the point of failure. You'll be much more likely to succeed at that point because you won't be setting yourself up for making bets off hope. You will make much more strategic, capital educated plays. I don't know what I was trying to say there. You'll make smarter decisions with your money. That's what I'm saying. And that's an important part to do. So the next thing I wanted to go over was just a little bit of conjecture from the side point. Number one, big shout out to InsureAce. Even though, again, we don't know really where we are in the markets, it's not as easy to tell as when we were down here when the bull market was starting. That was a clear ringer. I was yelling from the rooftops for that one. Here, I'm not as confident. Could go either way. Feels like the flip of a coin as far as I'm concerned. So let's ignore that and focus on all the cool stuff that's happening. InsureAce has made a bridge to the Binance Smart Chain. I think that DeFi and in the insurance area and insurance protocols in the DeFi sector are going to be a pretty big deal over the coming years. And it's because of reasons like this. Mr. Mark Cuban was part of something called Titan that went from $60 to $0 in one day. Well, there's a lot of things wrong with this comment. Number one, this is his quote. He says, I provide two different tokens, DAI to Titan, and enable QuickSwap to offer swap between these two tokens. This is a pair of one of many, and you can also see that based on this, a 25-point volume swap pays my return. Now, the downside here is it doesn't seem like he understands... It doesn't seem he understands some of this stuff. Like, I don't think he actually knows a whole lot. Like, he's got all this money and all this backing. And based off what I'm going to read this to you because I'm not going to tell you why I don't think he understands it, but I'm just going to read it to you. And for those of you who are witty enough, you might come to the same conclusion as me, but this is a quote from Mark Cuban. This is a billionaire investor here too. So on my return, my initial investment was only $75,000 based on fees. As of writing this, the annualized return of about 206% based on the fees earned in the last 24 hours. Well, that's a pretty augmented way to try to figure that out, considering bull markets are very wildly volatile in trading, and then bear markets are boring where nobody's trading. The percentage return will vary over the map depending on activity, but the cool thing is when I don't get extra rewards for this pair, I'm currently an LP in this pool, so I get 100% of the fees. But why would you... Here's the thing, right? When you're a market maker and you're adding liquidity, you're technically losing the asset that you would want to get the DAI or the stable coin effectively. And this is what's called impermanent loss. And often if you've made a good investment, it will drastically outpace any of the fees you can get, unless you're talking about hundreds of millions of dollars like Chamath Palihapitiya has done with lending his Bitcoin to Coinbase to take up basically both sides of the trade. Like, here's the Bitcoin, here's the US dollar, you can trade in and out, no transaction fees. But if you want to send it, then it's a different story because you've lost your Bitcoin, you've ended up with more US dollars, right? So it's called impermanent loss, right? If you want to keep the Bitcoin and you end up with the US dollars, well, now you don't have the Bitcoin because someone traded it and now you have more US dollars, right? It's a great function, but only in an extraordinarily large amount of money. Being an LP, at least with the current market makers, even if it's running on QuickSwap, doesn't make a whole lot of sense to me for fees wise, but what do I know? I'm not a billionaire. Anyways, so in exchange for providing liquidity both Titan and QuickSwap need for their business, I get a 0.25% of the transaction volume for the swaps between these two tokens. As long as I keep making good return, I'll keep my money invested. If not, I can immediately withdraw. And this is the thing that's kind of interesting here is that the price has fallen down, and some argue that the investor billionaire Mark Cuban has only exacerbated the situation as people discovered his DeFi wallet alleged that he was one of the sole or largest providers of Titan to DAI. Now, if he was one of the only people providing a liquidity pool of a very small amount, this is what you get. You get a price that jacks up to $60 and then crashes down to zero. Because I don't think he knows how this shit works. all these people he's paying, and I don't think he's grasped how it works, because he later goes on to say here that I exited my position, and then within a very short period of time, the price crashed. And I wasn't happy about the trade, probably because it was something like this, where he may have exited here, or like on either side of this potential play, taken his liquidity out, and then it would have just fallen and collapsed because the price could move down with the smallest amount being sold. So very interesting to see that very intelligent investors may not actually know how this stuff fucking works. Anyways, hey, Mark Cuban, maybe I'm wrong. I would love to have you on the show. I'm not insinuating anything. I'm just making some conjecture based off the data that you're leaving behind and the quotes you've left. So if you have something else you'd love to say, hey, please hit us up. We'd love to have you on the show. Anyways, that could be the case that Mark Cuban caused it without actually knowing what he's doing, because his understanding of what a liquidity provider is here is like thin. It's like an early player in the DeFi sector. It's like, yeah, I'm an LP pool. Anyways, Mark, you like clearly from the cause of our financial statements, you've done better than I have. But do you know how this works? Anyways, love to have you on the show. Let me know. Anyways, so that was that. Which things like Insurace, again, I believe that the DeFi sector will start to build in insurance protocols. Again, what you saw here was just a real lack of liquidity being removed. Again, for those of you that don't know, I could add the majority of the liquidity. If I took it all away, the price will fluctuate wildly when anyone sells even a small amount. And this is likely what you saw. If he had even, let's say, half of the pool and didn't know it, took his liquidity out, gone, just like that. So it's a really unique, it's really difficult. I think it's really difficult for people to understand how this stuff works. Even me, I don't really know how it works. I'm still always learning. So anyways, it's just, so a few of you say you can't hear me. It's definitely you that need to move up the volume. I apologize. We're going to be traveling a bunch. It's too bad this mic doesn't work a little bit better. I thought it would. Maybe it's your guys' fault. Let me know in the comments if the volume was okay. It's probably just one of you guys. And I'll try to do a better job because I'm going to be on the road for a while now. Oh yeah, we'll leave it at that. Follow us on all these social media channels down below. Oh, hey, and for all the BitBoy, I was going to call him Bear Boy too for a second. That wasn't going to work. For all the BitBoy new family that have joined, thank you guys. We are going to be on the Around the Blockchain episode on Tuesday next week, so be sure to tune in for that one as well. I'm excited to continue to grow and chat with the BitBoy squad. Super stoked for them to invite us back on the show. Remember to follow us on all these fun social media channels down below. Awesome, you guys are all telling me the volume is good, so I'll try to keep this up to date. Again, I bought a new microphone that was easier to bring on the road, like not my nice badass microphone, and even still like technical difficulties all along the way. So thank you guys for bearing with us through this learning process. I'll actually maybe spend the last few minutes here just taking a look at some of your guys' questions before we jump off today's episode, and then go through this. Okay, let's take a look. Andrew Vito says, if crypto is a hedge against inflation and is a valuable digital asset, especially when failing dollar, how do you explain its swing in price from celebrities? Its swing in price had nothing to do with Elon Musk, technically speaking. That was just an extraordinarily well-timed event. And that's how the universe works. If you start to do deep dive research into Wyckoff, you'll understand that that's actually normal. It's not being moved by celebrities. It's actually was on the verge of breaking down anyways, and it just happened to be a cascading event. Now, on the other side of things, I was reading a really good tweet storm today, which maybe I can open up and share here. So for those of you that check out Nassim Taleb. I know a bunch of you probably don't like Nassim to some degree, but he shared this on his Twitter. It's called Bitcoin Currencies and Bubbles, and this is the introduction and abstract, which I'll just read you the abstract. He says, this discussion will apply quantitative finance concepts and economic arguments to cryptocurrencies in general, Bitcoin in particular, as they are about 10,000 of them at the moment. We focus, unless otherwise specified, on the first crypto as per the original protocol, Bitcoin, with the largest market cap. In this current version, in spite of the hype, Bitcoin failed to satisfy its notion as a currency without government, although I somewhat disagree with that. It worked, it's just volatile. Without government, that worked too, so I disagree with you there, Nassim, but I agree with a lot of the other sentiments you bring to the table, so keep reading. It proved to not even be a currency. Well, that's not true, just a volatile one, but hey, fuck, all currencies are volatile. Yeah. So there's that. If its expected value is higher than zero, it can operate at a reliable inflation hedge. And worst of all, it does not constitute, not even remotely, a tail protection for the vehicle for catastrophic episodes. Now, we haven't seen that yet. We haven't seen a catastrophic episode aside from the pandemic, and Bitcoin's price stayed above $3,000. So it maintained its base value. So I would disagree with this as well. But in general, I think he's trying to make conjecture around the volatility of Bitcoin of not being good for its use case as a currency. So going through monetary history will also show a true numeri must be one of the minimum variance with respect to arbitrary basket of goods and services, how gold and silver to their inflation hedge status, how gold and silver lost their inflation hedge status during the 1970s Hunt Brothers squeeze, and what would be required from a true inflation hedge store of value. Now, there's probably nothing that would do that because value and price are wildly different fucking things. So it's just a good read, although I think Nassim's missing some of the points here. I actually believe he's got a lot of really great stuff. So check him out on Twitter. It's a great read. It's worth the time, and you can find about what you like or what you don't like. Technically, Bitcoin isn't a great hedge against inflation. It's the idea that every asset will do well in inflation. And as we went over the other day, when the S&P 500 has been going up with the monetary supply, basically. So everything has been being inflated. We have been in an inflationary process since they started the currency, basically, or at least in the Bretton Woods when they went off any type of reserve for the currency. We've been in an inflationary nature, but the cause for concern would be hyperinflation. And the real abstract part about hyperinflation is, well, fuck, if I can buy a $90 microphone and, well, this is a $5,000 camera, but that's a different story because I can do stuff like this. Like, what? How much do you spend on that camera? Way too much. But the point of this is it's a great camera. And with this microphone, this camera, and this nifty-dufty little LED light that I'm sitting on the top here, we can go live to thousands of people. And that's a deflationary mechanism. And technology is inherently deflationary. So right now, we're able to do something that just 10 years ago would have cost tens of millions of dollars, and FCC or FTC, all sorts of regulations that we probably could have never passed to get here. And this is a deflationary moment. Technology is an inherently deflationary moment. So you have hyperinflation, them trying to print, and technology trying to make things cheaper all the time. Like, this is a $90 condenser microphone that I can plug in through USB, and it's freaking awesome, right? It probably sounds great for the most part, aside for the one or two people who says it's too quiet. So when you have these two like exponential potential forces running up against each other, we kind of need to print money. Now, I'm not an inflationist. People are like, oh my God, you're an inflationist. All the Bitcoin people hate me for saying this, but how do you deal with velocity in currency? It's a fucking very difficult question to answer. None of the Bitcoin people have been able to answer it, right? Bitcoin makes a better money, shitty currency. Doge might make a better currency because at least there's some type of inflation to deal with velocity or lost money. Like, what happens when you lose a bunch of capital like you have Bitcoin in the trash dumps of the world? You have a limited supply. What if you need more velocity going to the tens of thousands of new people being born? So because you have these very difficult processes of deflationary exponential course of nature where everybody can have their own YouTube show, everybody can reach millions of viewers if they're interesting and have a great story to tell, and it costs basically nothing to do so. That's deflation, and them printing is an inflationary rate. So it's about hyperinflation. We've been inflating everything. Everything's been going up in price. My computer is significantly better, but it's the same price as a laptop was 5 years ago. It's still around $2,000. So it's getting better, but the price is staying generally the same. Now, It's not the greatest explanation, but when you're dealing with these ruthless forces of deflation on one side and ruthless forces of government printing on the other, you're looking to try to keep this balance where at any point we could have a technological breakthrough that basically says, wait, why the fuck is anybody working or anybody producing? People are like, oh, well, you're a socialist or a communist. No, it's like, it's a very real, literal question. What happens when we figure out how to produce infinite or near infinite fucking energy? What's the point? What's the point of sending people to day over day jobs for regulators who regulate regulators regulating regulators? Like, it's just, we're a bunch of people that do fucking stupid, redundant jobs right now. They would be better off focused on doing something useful and entertaining. I think that this is the real question that technology has always been trying to bring to the table. It's like, well, you should be doing with your time what you find most valuable, because this life is precious. It is beyond dollar value, and it is way beyond the ability to evaluate something in general. Like even the blink of an eye is this miraculous moment of, holy shit, we're alive, ladies and gentlemen. Anyways, we'll leave it at that. A little bit of a, I don't know what I was went on a rant there. Steel with the Arcane Bear. Thank you all for joining us today. I really appreciate your guys' support. Give us a thumbs up. We'll see you on the next episode. Let's see. Yeah, I see a bunch of you guys were asking questions. Let me know the volume is good. That's good. I appreciate that. Awesome. I love to hear you guys enjoyed the content today. Thank you all for joining us. Steel with the Arcane Bear. We'll see you again on the next episode.